As is often the case with the first week of any given month, the main macroeconomic item is going to be the latest American jobs and wage growth figures. And, as usual, they'll come out on 3 different days in 3 different formats. The ADP National Employment Survey is due on Wednesday, the 31st of August, and it will look at how many jobs America created last month. This is, however, a bit of an odd one, as ADP suspended its survey in June while it, and I quote, retooled the report to make it more robust. This came after regular criticism that the ADP findings bore little, if any, relationship to the government survey, which comes 2 days later. More on that in a second. Anyway, for May, the last reading from the ADP showed 128,000 new jobs added, and that was, by the way, the smallest gain since the COVID-19 outbreak in early 2020. Next up is the Challenger, Gray and Christmas Job Losses Survey, and that's due on Thursday, the 1st of September. The last reading here was 25,810 job cuts in July. That was the second highest reading so far in 2022 and represented a 36% increase on the same month from the year before. However, those figures are still low by historic standards, and it's too early to say whether the increase in job cuts is definitely pointing towards a recession or not. Finally, we get the big one, Friday the 2nd of December, and that's the non-farm payroll survey from the US government's Bureau of Labor Statistics, and that will give its verdict on job creation last month relative to the privately backed ADP survey. The non-farm payrolls figure for July was strong, as it showed the addition of 528,000 jobs, the second highest reading in 2022. So as you can see, the numbers are very confusing right now. The official U3 unemployment rate is just 3.5%, so the labour market seems tight, especially in the context of a job vacancies figure that still exceeds 1 million, according to the Job Openings and Labour Turnover Survey, or JOLTS. Now, the result of tight labour markets is often wage growth, as firms fight to attract and then keep talent. So also keep an eye on the average hourly pay number that will come from the Bureau for Labour Statistics. Last month, it was $32.27, 5.2% higher than the year before, but lower than inflation, but nevertheless still probably enough to have central bankers on edge as they continue to fret about a pay price spiral, which entrenches inflation, or at least it would if the 1970s is any guide. On the corporate front, it could actually be fairly quiet, at least so far as scheduled news flow is concerned, especially since Monday's a bank holiday. Just one FTSE 100 member is expected to release a statement alongside a smattering of mid and small caps. Names which may be worthy of further research include the following, although do please note that some of these dates could yet be subject to change. So on Tuesday the 30th of August we have Uniphar, then come Chesnara and Ben's Creek on the 31st, Johnson Service Group and PPHE Hotel on the 1st of September, and then fund manager Ashmore Group will round out the week on Friday the 2nd of September. But the company that could just cause the biggest fuss in the week ahead is FTSE 100 member Bunzl. The specialist distribution business is due to report first half or interim results on Tuesday the 30th of August. After rising by around a sixth over the past year, Bunzl's share price stands only a fraction below its all-time high, buoyed by June's trading update, when Chief Executive Frank Van Zanten raised the company's guidance for 2022 for a second time. Bunzl now expects, quote, very good revenue growth for this year compared to a prior forecast of moderate growth, and it still believes that the group operating margin will slightly exceed historic averages. A lot of this may be down to Bunzl's business model. It supplies the things that other firms need in order to do business, but not items that they actually sell to their customers. For example, Bunzl supplies disposable coffee cups to cafes, food wrap to supermarkets, hard hats to builders, cleaning materials and bandages and rubber gloves to hospitals, and so on. The required nature of these products may provide some shelter to the firm from the vagaries of the economic cycle, at least to some degree, and it may also give Bunzl some pricing power, a key ingredient for any company during inflationary times. In July's second quarter update, Bunzl revealed 16% sales growth for the first time on a stated basis, and a growth rate of 12 to 13% using constant currencies, albeit with some help from acquisitions. Mr. Van Zanten did flag his inflation as a key driver of sales, and also noted strong revenue increases in Europe, the UK, and America, where he noted negotiations with one key customer were ongoing, so keep an eye out for any commentary there. With this more comprehensive set of figures for the interims, analysts will also dig deeper into the regional patterns, and also, after dissecting the sales mix, they'll look onto 3 more sets of figures. The first will be operating margin. Bunzl's return on sales has been pretty stable, around the 5 to 6% level over the last decade or so, on a stated basis, and a bit higher on an adjusted one. Again, Bunzl has suggested that 2022 could come in higher than the long-run average. The second number were the headline pre-tax profit figure. For 2022 as a whole, analysts expected an 11% advance in profit to £633 million. At the interim stage a year ago, Bunzl's adjusted pre-tax profit figure was £245 million. And finally, watch out for the dividend, even if the forecast yield isn't the biggest at around 2%. Bunzl's streak of annual dividend increases that dated back to 1994 was halted by the pandemic, but the firm quickly got back on track and did actually offer a catch-up payment shortly after. For 2022, analysts are looking for a 9% increase to 62 pence a share, so that rate of growth may be a fair benchmark for the interim report. Bunzl paid 16.2 pence a share to its investors at the first half stage last year. More strategically, watch out for an update on acquisitions. Bunzl has traditionally used bolt-on deals to supplement its organic growth and complement its business structure. The firm spent £508 million on 14 deals in 2021, and it's already struck 6 deals at a cost of £220 million so far this year. I hope that you and your families are all in good health and good spirits. Thank you for watching, and I look forward to seeing you next time.